All right, good morning, everyone. Happy Monday, March 24th. Let's do a quick sound check here, make sure we are G to G. All right, good morning, Omer. Thank you, my man. Good morning, Miss Lorna. All right, guys, we got a green open here, which is a rare sight nowadays. S&P futures up 1.1, NQ up 1.5, YM up about 1%, the little rut up about 1.5, gold futures are flat, silver futures up 0.5%, and Bitcoin up a cool 4%. So we're doing a lot more futures trading in my room as of late, and I'm in the lab right now. I am in the laboratory, working on. My initial thought is used mainly for futures. Um, no, still a work in progress, but kind of working on these, call it trend following candles. Basic stuff. Candle is pink, you get short, you stay short. Candle is gray, you do nothing. Candle goes blue, you get long and stay long. So I got long the MNQ here back on Friday. Which might have been a little bit cute getting swing long over the weekend. But I got the first blue candle here on the 30-minute. And then on the gap up there last night, I bought another contract. And I'm doing the minis. So like 1, 2, 3, maybe 4 mini contracts. Nothing too big. But I added on the pop-up. And then based on the candle here, I should still be long. I punked out around, I think, maybe 4 o'clock this morning. But yeah, I'm going to keep on working on that. And main thought is just kind of an income approach. Where if you look at, think back to that Q4 market we had. Apple had a beautiful weekly squeeze. There was one for Amazon, Netflix, QQ, all the above. That's always been and always will be my favorite market. Like I love a weekly squeeze. I love a 2-day daily squeeze. You jump in, you buy some calls, you sit back, you let it work. Right? I love that kind of action, and I do think as you get more experience under your belt, as you trade longer, those are really good moments in time to, I think step in, get a bit aggressive. You can make some really nice outsized cash. We haven't been in that kind of market, I would say, since December. So you've got the bigger moment in time swing trading versus the typical Monday through Friday income trading. So I'm keeping track of it here. Let me see. We talked about this in my room a lot last week. Going from a really good swing trading market to more of a range bound, call it day trade market, to me has been a good reminder. You don't always have to go for the kill. For me, December was about $115,000, $120,000 month. Right? I would love for every month to be that bigger, but you don't have the same kind of wind at your back. You don't have those, really bullish weekly, daily squeezes setting up. So the good reminder for me in a choppy market has been, couple of base hits here and there, right? Couple day trades every day. You pick up $100 here, picking up a couple $100 here. It does begin to add up. So I'm keeping track of it. I'm going to keep on plugging away here on these little magenta and blue bars. And yeah, I'll keep y'all updated, let you know what I come up with here. But I am going to look to send out more of these in my room. I've been doing a few, but I am looking to do more. But all right, figured I would show y'all what I'm on here on the weekends. But all right, on the gap up, let's jump to the spreadsheet. And let's go survey the landscape. All right, so into the week here. Overall, pretty good signs of progress from the bulls. Now, it's not a bullish spreadsheet. All right, QQQ has a negative 23 out of 120. If the Qs are bullish, they would have 80, 90, 100, or 120 points. All right, so something like a gold with an 85 out of 120, yeah, gold's been bullish. But this is progress in context of a market that pulled back for a few weeks. We went from more so bearish scores back to neutral scores. QQQ a negative 23, S&P's a negative 20, Dow Jones a negative 16. And then down here for the Big 10 names, you have Netflix, pretty impressive, a positive 63. And then Meta's neutral, negative 12 is neutral, TSM's neutral. I'd even argue a Google with a negative 36. Yeah, it leans a little bit more bearish, but it's more so just neutral. If Google was really bearish, you have a negative 90, negative 100, negative 120. For your sectors, gold's been pretty solid. Had a handful of good trades there in gold, energy, utilities, silver. And then financials are neutral, healthcare is neutral. I'd even call XLK neutral. So collectively, it is just a neutral market. Coming from scores that were certainly a lot more bearish. So a little bit of progress here from the bulls. And then on the pop here, the NQ, things do look a lot better across the lower time frames. You have a 2 hour, 1 hour, 30-minute, 15-minute, 5-minute buy signal into the open. All right, so we've gotten to a point where they pulled it back. And of course, on that pullback, think 5-minute chart all the way up to a 2 hour chart, everything's going to be bearish. You're pulling back, lower high, lower low, lower high, lower low. Then you go through a bit of that bottoming phase. You're no longer making lower lows. They're chipping away at it, cleaning up the 5-minute, cleaning up the 15-minute. On the pop here into the open, they have cleaned up the 5-minute, 15-minute, 1 hour, 30-minute, 2 hour. Good enough to actually get them some buy signals. So that'd be a plus for the bulls. And it may be a bit more of a bigger picture conversation, but we'll have it. Don't forget for QQQ futures, S&P futures, cash QQQ, cash SPX. Let me look here. NVIDIA's got a weekly squeeze, TSM got a weekly squeeze, Bitcoin futures, the YM, NQ. In the background, we still have a lot of big weeks setting up. And it's a little bit impressive, call it. From the pullback from the highs to the dead low, we haven't gotten bearish weekly scores yet. NQ has a 4 out of 15, which, I don't think you jump in and buy a 4 out of 15. It could be about 11 points better, but it's not bearish. From 22,000 and change down to 19,000 and change, nothing actually shifts bearish. We don't end up getting negatively stacked EMAs. They don't pull a 21 below the 50. They don't do too much damage yet. But the question still remains, eventually, which way will that weekly squeeze break? If they break it short, that could be NQ down towards 18,500-ish. If they could ever turn the corner and break it long, that'd be a push into 23,000 and change. So trying to figure out that eventual path forward, it's maybe more a conversation for Friday. By Friday's close, if they can at least crank out a close back above the 50, it doesn't guarantee we're going back to an all-time high, but it can give the bulls a little bit more breathing room, a little bit more room to fight. My thinking would be if they get a couple more weekly closes below the weekly 50, everything pulls back, everything continues to degrade, there's a better chance they do try to break it short. So they can get themselves, call it a lifeline here with a good weekly close back above that 50 SMA. All right, so you have better looking 2 hour, 1 hour, 30-minute, 15-minute charts. You're trying to pop back above some weekly support. The only potential issue on the pop here, the pop takes us right back to our falling daily 21 EMA. All right, so if you looked at the inverse chart of the NQ, minus NQ, flip it upside down. On the inverse chart, you have pushed off the bottom. You've gotten yourself an overall pretty bullish score, 10 points out of 15. You have bull trend, bull structure and bull momentum. All right, here's your first pullback to potentially that 21 EMA buy zone. If I'm looking for a short, it's not the first spot I want to short it. They pump it, they pull it back, they hold it here. They might turn the corner, go on and make a brand new high. So better looking hourly charts, better looking 15-minute charts back above the weekly 50, but the pop takes you right back towards that falling 21. So my advice here at the open, one benefit of trading the futures, you'll sometimes wake up to the cash market and the move might be done for the day. Not saying that'll be the case here today, but it's a decent pop into the cash open. So my advice is, watch EMQ, watch that 22, watch that 2270-ish level. And then on the cash market, we have QQQ gapping into 488-ish. And you got that daily 21 a bit closer to 490. So they might gap it up. They might push the QQQ another dollar or two. Be a little bit careful about jumping in and buying it for a fresh long right under that 21. What could be maybe a little bit more likely, all right, you flush, you bottom, you bounce, get your first back test of that falling 21. They might not break it through for a push higher on that first attempt. But my expectation would be at the open here, we should get some, I would think 15-minute, maybe 30-minute buy signals. All right, so if we look at the NQ, for example, since we've got the buy signals, all right, you flush it, you bottom, fail the first test at that 21. Right now, you're 2 hour, 1 hour, 30 down to a 5. They say try to buy that dip. So if we pull up the hourly NQ and get through that 21 on the first pop, look for a pullback here into the hourly. All right, the hourly buy signal says trend-wise, structure-wise, momentum-wise, everything's positioned for an hourly uptrend. If that is the case, if they kick back into hourly trailing stop, hourly 21, and you still have good trend, good structure, good momentum, that might be your buying opportunity. So that's the victory for the bulls at the open. They, for now, at least, have gotten lower time frames back to a point where you'd look to buy a dip to a 21 EMA, you'd look to get long in a squeeze. If they get rejected here, pull back and totally drop the ball, right? We lose the 2 hour buy signal, we lose all the buy signals. Might not be a dip you're trying to buy. Or we don't dip and we pull through that 21, and it's just a short squeeze Monday. But that'll be the theme, I think, here at the open. Good looking gap up should bring with it better looking lower time frames. But if this is day one of the biggest short squeeze the market has ever seen, do I have to be the first guy to buy it? If Qs are going to go from 480 all the way into 520, I don't think it'll make a big difference if I buy it at 488 or 495. They could pop it, smooch that 21 EMA, roll over right back down for a fresh low. So patience on the indexes, anchor to your lower time frames, and then I would still suggest more of a day trade approach. Maybe give it a few days, get back above some 21 EMAs, get back above some key levels. Then the signals might support some short-term longs. You buy it on a Tuesday, you sell it on a Wednesday, Thursday kind of thing. But I'm thinking patience. I'm thinking, well, here's the good news for a guy like me. Now, I would expect a lot of these 15-minute, 30-minute, maybe even the hourly squeezes, they might fire long on the gap up. But looking like I got plenty of squeeze action. 4 hour charts, you have QQQ, S&Ps, Dow Jones, IWM, Amazon, Broadcom, Microsoft, Meta, Google, Tesla. 2 hour squeezes, Apple, Amazon, Broadcom, Netflix, NVIDIA, Microsoft, Google, TSM. But they're all blue right now. Blue is just a neutral squeeze. Looking down here, I have the silver futures with a green candle or a green box. All right, if I look at the silver futures on a weekly chart, okay, well, that's not neutral. That's locked and loaded. A plus setup, perfect 15, all the pretty colors. So that'd be the key. Little patience, watching the indexes at key levels, and then taking all these what are now neutral squeezes and seeing if they can, seeing if they can flip bullish. Whether it be a 4 hour chart, 2 hours, minute, we're taking them where we can get them. And then one more thing I want to take a peek at, and then if y'all got questions for me and the any chart requests, I've got you covered. But the VIX, the old VIX. Yeah, much better behavior here as well. Back under 20, back under 19. So for the most part, if they can just keep VIX back where it came from, 18, 17, down back in that range, should give the Bulls a little breathing room to try to get something going to the upside. We're about to find out. All right, and then a few of the Big Ten names here. Number one on the spreadsheet was Flick, so we got to start there. Numero uno on the spreadsheet. And for Netflix, I believe you have the call wall at $1,000. All right, Netflix call wall at 1,000 and a put wall at 900. So call wall being at 1,000 means potentially that $1,000 level could have a magnetic nature to it. All right, Netflix gets moving. You get a couple of squeezes, couple of buy signals. If you're not too far from that 1K level, it might be a bit of a self-fulfilling prophecy, and they take it from the current price towards that call wall. On the flip side, you get towards that call wall could also be a brick wall of resistance. So short term, could there be a roadmap from 950s into, we'll call it $1,000? And I'd like to play that path through a squeeze. So 2 hour, 1 hour, 30, 15. Now we're going to gap into about 970. Which should, keyword being should, give you a few buy signals here. We didn't have any by Friday's close. But the game plan here would be you're above that 950, 960. And then trying to catch one of these squeezes here with a buy signal. Let me see, 1 hour. You do have the hourly 200 around 970, which, that'll be an important over-under level. But yeah, we'll keep an eye on Netflix, watch the squeezes here. If any of them can turn into an A+ setup, we shall get busy. From Netflix, we'll jump over to NVIDIA. And let me see, call wall for NVIDIA is $1.30. All right, I'm going to mark up about $1.25, $1.26. You have the 200 SMA, you got the 50 SMA. All right, and then my thinking would be, could we get one or two closes back above 120? Couple closes back above that 21 EMA. And then whether it be a 15-minute squeeze, a 30-minute, a 1 hour, 2 hour, whatever it might be, can we find it on a squeeze above 120 with a lot of buy signals? On your Friday close, you have a lot of squeezes, but no buy signals. On a gap into 120 and change, you might get a few. So pretty easy game plan to work there. Let it get above 120, make sure it can hold above 120. And then as far as managing your risk, you would anchor to 120. If I can buy it on a squeeze at 123, then from there my risk is going to be a move and a close back below 120. In exchange potentially for a push into that 126, 127-ish. So looking for squeezes and buy signals above that 120. Jumping over to, let's go do Meta. All right, Meta gap it into 613-ish. If we can get a good week of action from the indexes, look for things to bounce back towards a daily 21. Overall, I think a good game plan. You have to start with the indexes first. But if we got a good QQQ, a good S&P, all the above, could Meta work back into that 620-ish 21 EMA? On the gap up, you're going to be about $7 shy, so not too far. All right, so let them gap it up, let them figure it out, and then maybe later in the afternoon, maybe a bit before the close, Meta is taking a breather, and you've got a really solid 15-minute, 30-minute end-of-day squeeze. Market looking good, internals looking good. You can maybe jump in and buy that with 620, 625 call for Friday. Right, you're not getting goofy, not calling for a push back into 700. Looking for a reversion to the mean back to home base. They want to give you more, they give you more. You'll take it, of course, but pull it back, find the bottom, reversion to the mean. So 620-ish for Meta. Let's go check out some Microsoft. Right, either playing it for a move back into the 21 EMA or buying it after a couple of closes above that 21. With a gap up into 396-ish. Yeah, 396-ish here for Microsoft. That'd be you're trying to buy it on a close above that 21. They gap above 393. They close above 393. Look for 15-minute buy signals, 30-minute buy signals. All right, that could be a kickback into $400. So there's Microsoft. Quick look at the Apple. Apple set to pop into about 220 with your 21 EMA around 225-ish. Let them gap it up. Let them do their thing. Let all the dust settle. And then maybe later in the afternoon, maybe before the close, Apple's got a 15-minute squeeze, 15-minute buy signal. Internals looking good. Index is looking good. Right, that might push from 220s back into 225-ish. And you're not calling for anything all that crazy, right? Not looking for a brand new all-time high. You're not coming in here buying the 240 call for Friday. Have we gotten to a point where we found a short-term bottom, and now signals off the lower time frames are good enough for a little kickback into a 21? So that, my friends, will be the bulk of the game plan here early. Watching indexes, watching lower time frame squeezes, watching the internals. We'll have the VIX up, we'll have the ticks and the advanced decline up. And then maybe later in the week, open-minded to more of a swing trade opportunity. Till then, being nimble, being quick, day trading them squeezes. All right, NQ still pushing here. Smooching that daily 21. All right, so cash QQQ is going to open 488 and change. Couple of buckaroos shy of that 21. SPY is going to open 571, 21 EMA around 573. So everything either getting there or getting above it. But all right, yeah, I think that was the bulk of what I had for you. I'm going to check my notes here. Looked at the Big 3 sheet. Oh, yeah, a couple more things off the Big 3 sheet. So we did the scans for the daily squeezes. Bullish and bearish. And on the bull side, I would like to keep an eye on RGLD. Now, these all have really good-looking daily squeezes, but when you sort them, RGLD with 118 points at 120 is a lot better than a KVUE with only 33 points at 120. They both have the same quality daily squeeze. All right, so here's KVUE. Yeah, it's a really solid daily squeeze, but no other buy signals. And then here's RGLD with a really nice daily squeeze and a crap load of buy signals. So that one I don't mind. BMY, not too shabby. But for the most part, going to keep it an index and futures focus. Couple 5-minute squeezes trying to come through here. Let me check the ES real quick. ES is trying to work through the 21 and even trying to work through the 200. The mighty S&P futures. All right, 5-minuto squeeze. I'd buy it on a white arrow, but I don't love buying it right on the forefront of the breakout. But all right, y'all, let me get caught up in the chat, see what you got. And then, folks, in my room, we're live in about 10 minutes. All right, Rico, Lorna's got you taken care of over there. Trading in retirement. Good morning, my friend. Really, really good question here. When you go long using out the money calls, do you have guidelines for days till expiration and delta that you typically buy? Yeah, that's a really, really good question. So first answer would be in terms of the strike. How far out the money with the strike selection. Good example would be an RGLD. And my thought would be, all right, if I'm going to buy an out the money call on that daily squeeze, if I catch a move I'm looking for, what's a realistic target? With a high degree of with a good degree of consistency, what can I from these squeeze setups? And I found it's a push from that 21 EMA into about 2.5 to 3 ATR above that 21. So for RGLD, I'd be looking for a move into, we'll call it 163 and change. Now, in terms of strike selection, what I might do from there is if I'm going to go 163 target, I'm going to bump that strike maybe a little bit below the target. So it could be, maybe I'm buying the 160 call, maybe I'm buying the 162.5 call. The main goal being, can I buy it when the call is out the money? With a realistic chance that sometime soon that call might be at the money or even better yet, in the money. Say I go and buy the 170 call and I catch the initial push from 155 into 165. And then I get a good 5-10 days of nothing but chop back and forth. All that open P&L and that deeper out the money call. As we know, it's all going to vanish. So I like buying it a little bit out the money, but also at the same time, if I can catch even a decent chunk of that push, the call should end up at the money or in the money. So taking that 2.5 to 3 ATR extension and then buying calls a little bit below that. And then for the second part of your question, in terms of time till expiration, what I've come to find more and more, it's very rare that having more time will hurt you. Right? Time's usually going to be to your benefit. And yeah, no doubt, if I knew for a fact that Royal Gold was going to go to 165 for this Friday, I would buy it for this Friday, and it'd be a huge bang for my buck, big percentage return. But if I'm buying it for Friday and Monday, Tuesday, Wednesday is just a little quiet, I'm already getting hammered on that call. So I think from a consistency standpoint, allowing your trade more time, it's almost always going to work to your benefit. It's easier to sit through all the back and forth, easier to sit through the ebb and the flow. And I think you generally give that setup more time to work. And then, from there, in terms of guidelines on time till expiration, if it's, if I'm looking at a 5-minute squeeze, I might be thinking 5-10 days till expiration. If that 5-minute squeeze can't fire in my favor in 5 or 10 days, I think I'm off on the timing. But if I'm looking at maybe a weekly squeeze, that could be anywhere from 40 to 60 days. If you're going to lean more and more into the out the money options, I think you lean more and more into time till expiration. And I'm always, call it pleasantly reminded. I might buy a call that expires in, 60, 70 days. And then I catch a move towards my target in maybe 4 or 5 days. It's still a really good bang for your buck. So I think for all of us, somewhere there's a sweet spot where, buying them out the money and I got that potential for that nice bang for my buck percentage return, but at the same time, I'm not going to back into a corner. I'm not backed into a corner where that daily squeeze better fire today. So really, really good questions there, my friend. But all right, y'all, I will let you go here. Cash markets open in 13 minutes. And again, a lot of progress being made on lower time frames on the gap up. It's just that the gap up on the indexes does take you back to, short-term wise, what could be a pretty big turning point. They pop into a falling 21. They can't get back above a falling 21. That might be the flush, the reversion to the mean, and then we break them back to a fresh low. Any point this week, they can get it and keep it above that 21. I think they open the door for a bit more upside. And then a conversation for Friday. Cash indexes, futures indexes, can they get closes back in their weekly 50s in the context of their weekly squeezes? And to be clear, if the QQQ closes 489 this week, doesn't guarantee they're going to fire that weekly squeeze long. It'll put a short-term band-aid over it and maybe help it avoid trying to fire short for now. But more of an end of week conversation. But all right, y'all, thank you again. Happy Monday. I'm back with you in here, same time, same channel on Wednesday morning. So have a great Monday, and I will see you then.